All right, next in the series of VPA, we're going to talk about the bull stage analysis. The bull stage analysis is basically accumulation, explanation, and climax pattern, right? Explanation and testing pattern. This is going to be the next video that we cover after the bear stage analysis. Explanation and testing pattern. Okay, so let's talk about the bull stage analysis. There's really the bear stage analysis. This one here has the picture that really shows you the market, right? So there's a accumulation phase, there's the trending phase or the markup phase, there's the distribution phase or selling climax, and selling climax is the pattern that we're going to cover. Distribution phase is the thought or what's actually going on, selling climax pattern, and then a downtrend. So accumulation, range, uptrend, distribution, range, downtrend. So yeah, that's basically what it is. But let's really talk about the thinking behind what actually happens. So the campaign starts. This was after distribution, and then we're in a downtrend. And this is the wave 3, if you guys know Elliott waves. And this is 4, this is 5, where everybody's on the same side of the market. And when it comes to accumulation, it takes more time generally because you got to build the confidence in the traders and investors because the market literally just dumped, right? So it just had a downtrend, and then so that's basically what Bitcoin kind of did, right? But it didn't make so many lows right here in August 2021. So and then we finally broke out, and the breakout you want to see on low volume because this is basically indication that there is accumulation and that the bears are trapped. There's no more selling. Look, this is accumulation volume. This is what you want to see in a range because the next thing you want to be confident that the uptrend is going to last. And finally, the explanation in the climax pattern. At the end of the range, you're going to want to see these wicks right here, bang, bang, bang. This is a little bit, how can I say, like looking like a 15-minute chart kind of thing, you know? Like on the daily chart, you're probably not going to get huge wicks, long wicks like that, but you're going to have some volume. So let's take a look at the Bitcoin daily chart, for example, of the pattern that we just got right here. Let me clear that for a sec. And basically, it's a range, right? But you also want to study the asset, right? You want to study the asset because does this thing range? Well, it reminds me of back in right over here, this range right here. So 1, 2, 3, 4, and then breaks out kind of like a triangle thing, right? With higher bottoms, which is even more demand. Higher bottoms is more demand than ranges. So this one here, we had a lower bottom and then we had a higher bottom, but 3 bottoms. 1, 2, 3. 1, 2, and then 3, and then we pull back, break out. So this is kind of a little bit where you have to think about the balancing of the supply and demand. What do you guys think? Is this too much demand? Is this overbought right here? Is there? I mean, I don't. The term of overbought needs to be classified and defined, right? Right, because it's not necessarily like that term shouldn't really matter unless you have a proper definition of what overbought means. Overbought for me means that there's no more buying. Like all the buying has already been bought, right? So let's again talk about this is the buying climax. So at the bottom of the range, you're going to see these wicks. You should be seeing these wicks anyways on the reaction right here. So this was your support, right? Wave 4, previous wave 4 becomes support. This is where you see huge wicks, and then again a wick, but this one wasn't that big. So you take a look at the other time frames and you see, okay, this is probably a better example here in the weekly chart. Big wicks like that. Maybe the 3-day chart, one of my favorite charts. So yeah, the wicks are very important. And then what happens afterwards. So that was the buying climax pattern. You'll see this a lot on lower time frames and in ranges like that after a downtrend. So boom, 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 chops, like 3 tops, 3 bottoms, 4 bottoms. Gann says that the rule of 3 is usually the most that it'll touch. On the 4th time, it'll usually break, But if it breaks and comes back, then it's a good buy. But usually it doesn't do that. Usually it just breaks and goes down on the fourth time because there's too much supply. Why is it down there? Again, you got to be confident. The market has to be confident if it wants to continue to trend. So testing the market. Testing the market is actually another section that we're going to cover. Let's actually go into it because this one is a little bit harder to understand. It took me a little bit longer to, again, meditate and think about what is really going on right here in the test, because it's an insurance policy for these guys, for the market makers. It's literally called an insurance policy for these guys right here. So this right here is an explanation after it breaks out right here, after it breaks out, which is the stage that we're in right now for Bitcoin, just to say. Yeah, after we break out, we start to uptrend just like we did right here, and we're right here, like in BTC, right there. So we start testing the market, and what we want to see, the test on low volume, And guys, what I noticed yesterday, I think it was yesterday, that we do have a low volume pullback coming in right now. So this is called the test. This is an insurance policy to see, the market makers want to see how much selling is onto the market, how much selling, how much supply is actually in the market. So they're testing. They'll use order book strategies. They're actually going to sell some of their own shares in order to push the market down to see how much are how many stops, how much supply is there. So if we actually go down to the daily chart, we can see that there's a little bit of a test right now. I mean, some decent volume, but it depends what exchange that you're looking on as well. I was looking on the Bybit, so I didn't see this day. It was right here, so decent. And now we're coming up on low volume. We're actually going up like about 2% right now. So interesting. So do you guys understand? This is the testing phase. They want to see test on low volume because they don't want to see a lot of supply in the market, because that means that there's going to be a lot of supply up there. They need to know that all supply has been accumulated in order for them to go up. And to be honest, it's below average volume, but it kind of looks a little bit like it's kind of a lot of volume. But we'll see. Okay, we'll see. For up here, and also we have a bunch of resistances on top, like 50% points. So or is it testing the market on high volume, which they don't want to see, right? They don't want to see that. They want to see this on low volume so that they can continue the trend that there's no more supply. But if they see on large volume, that means that there's still a lot of supply, and that's riskier for them to continue buying the market up. So that's what the bull stage means. I hope you guys like this video, and again, I'm going to try to make a description about the testing patterns that's going to come later. But at the end of the day, it's all about having this stage, right? Having the stages in the market, and having strategies, tradable setups that you trade within the accumulation phase, the trending phase, and whatnot. So remember, a bull stage analysis, and we're also going to have complete market cycle or market phases. First things first, accumulation phase. And within the accumulation phase is this range right here at the bottom, volume. There's a buying climax inside of this phase that shows you that the capitulation selling is done. It's over. It's accumulated. Showing by this volume, showing by these wicks. People want it. It's in demand. Next is after it breaks out of the range, right? It breaks out of the range. You have the testing of the market. The test is their insurance to see if there's supply coming into the market, if there's selling. And so if the testing is on high volume, this is a fail, and that this is going to be where they dump, and they that's their insurance to say, okay, there's too much selling, there's too much supply, the market is too heavy, it's not absorbed, it's not accumulated, so that we have to restart the campaign and start to buy lower. If it is a test on low volume, it's absorbed, it's accumulated, it's ready to continue trending upwards. And you're going to see this a time and time again in the market, because this is how the markets work. This is how the market makers think and behave. This is literally their insurance policy. The next, we're going to talk about the bear stage analysis. I guess I'll just do it in this video here. I was going to make a separate one, but it's all good. So bear stage analysis is the same thing, but it's in the distribution phase. And Stan has a rule in the distribution phase that volume doesn't have to be big like the accumulation phase, but it should be, because this is where a lot of people get trapped at the top of the market. Once you see a lot of volume at the top here in a distribution phase range at the top of the market, this is basically a bull trap. And that once you see this breakdown, people here that bought and they're down 5, 10, 20%, they start to freak out and panic. That's what happened in Bitcoin. That's why we went down 55% of the all-time high. Doesn't this look a little similar? I know Bitcoin had a little different formation, more like a leading diagonal if you ask me. But anyways, the distribution top is the same thing like we described here in a bull stage analysis. But it's called the selling climax, not the buying climax, but the selling climax. But it's the same principle. Decent volume, right? And high volume, showing rejection, showing selling, and showing these wicks. So both the confirmation of these wicks, these candle closes, and the high volume caused by a bull trap, distribution bull trap. So they'll break down. So breakout, right? Breakout, and then the same principle of testing the low volume. So this one here was a good test because supply, there's no more demand, there's no more buying, there's no more buying. And again, this idea here of testing is going to be in the next video, but it took me a while to really understand why they do this. So the why is really because it's their insurance to see. It's their insurance to see if there's any more demand, if there's any more buying, if there's any more interest coming in the market. You can see that with low volume, there's no interest, and then they're just selling, okay, it's continuation. We're going to continue to trend it down. That's why it's important to know the difference between a bull and bear market, but it's the same thing at the end of the day. And then testing the market, this is the test on high volumes that you can see that there is still demand, there's still buying interest coming in the market, and we're closing on good candle indication, which means that it's not a good time to trend it down, because what these guys, the market makers, their plans to do is to accumulate it back at lowest levels possible and to cause confidence in traders and investors in order to incentivize them in rebuying the stock or the asset. So it's really about confidence. And so they'll make news articles and everything like that at the end of the bull market or bear market to try to scare people to sell. And so this right here was a bad test because it was on high volume. There's still demand, someone's buying. And so this is the whole market cycle, the whole market stage, and the price will move from base. This is one of Gann's rules right here, okay? So the price will move from base to base where they have previously seen high volumes of sales. This is where the volume nodes, basically this is accumulation, your buying climax pattern that we talked about, or we're going to talk about more detail, the uptrend, the distribution, the selling climax, right, and then the downtrend. So again, accumulation with the buying climax with the wicks in the good volume causing the uptrend, testing phase right here, the testing phase, which basically tells you that, yeah, it's been absorbed, it's been accumulated, we trend upwards, higher highs, higher lows, higher highs, and then distribution phase, ranging, selling climax pattern, lots of volume, lots of candlestick wicks, and downtrend, marking down because they want to accumulate as low as possible. All right, so that's it for this video. Hope you guys like. Peace.